And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, September 13th, 2023. Again, a very interesting day here in the market. We got the CPI number this morning. It did show that inflation has crept up, came in a little bit higher than what the expectations were from the market. The initial reaction was a quick drop down, and it reached 15,406 this morning, and then immediately just turned and started to be purchased back up. And by the time the market actually opened, they just had decided that it was going to go in a different direction and just continue to follow through to the upside. Now, we did get one additional sell, and that came right during the 10 o'clock hour with the market. But then again, that also was immediately just bought back up. So how I want to interpret this in terms of Elliott Wave is that we're now getting more of a nesting effect here on 1, 2, 1, 2, 1, 2, and an additional 1, 2, which would be here. Now, outside of that, the alternate on what possibly could be going on continues to suggest that we may, again, as I have said before, that the minor wave 2, which sits up here at the top here on the September 1st high, is not complete. So we got an ABC and then an X. I know it's labeled as 1, but it would turn into an X wave. And we're doing the second ABC. So this would be A. This would be B, completing today. And then we're in the C wave up. Now, if that were the case, what we would be looking for is for an extended rally higher, and those numbers come in at 15,900 to 16,000, and that would then be this C wave. So how I could add some to that, I would put the following. Now, I'm going to take some of these off because it could get a little confusing in there, but let me just see what I can come up with as I kind of go in and put what might come in as a C wave, now that we have that bottom. So the 100% is 15,755. But again, basically, if it's going to be a double ABC, I'm going to look for that second C wave to kind of come in above that level. So that brings me up to 1.618, which is 15,971. Now, what continues to happen is that when we get these rallies, the reaction to them as the selling can get very intense, but then the buyers shift back in. So what I really start to see is not necessarily that we're getting this big bullish move versus a bearish move. It's more that I'm finding that it has to do with how the options are trading within the underlying, and the underlying stocks within the NASDAQ, within the S&P. And so when I see that action in action, for example, for the past, I'm going to say 4 or 5 days, trading days, the focus has been on Apple. And each time Apple attempts to rally up, it gets up there, and it seems that, in fact, let me just double check to what Apple's, 176.51, 177.30, 173.98, or 174. So it had a little bit of a larger range than what it might normally get. But then when I look at the options, and I can see basically kind of what the larger firms, the larger trading firms, the larger market maker firms may be doing, is really kind of working options that expire, in the case of Apple, expire on Friday. Now, Friday is not only going to be a weekly expiration, but it's also a monthly, and they're considering, I believe, a quadruple expiration, which means we have contracts expiring in the equities, in the treasuries, and a lot of the other commodities. So you get a whole group of things all expiring at the same time. So consequently, when that takes place, we're now getting into that, I have discussed numerous times in terms of options, that we get into what we consider the gamma flow. And that gamma flow can really go to where they can push a market to a certain level, and if it's a large enough strike with a large enough open interest, and either calls or the puts or the combination of the two, then we start to get that gamma flow. And what happens is things go up. It forces traders with positions to buy into strength and sell into weakness, which is why we'll see these up moves to really gain some energy, as well as the sell-offs gaining energy. So, and then once they're monetized, you get a turn and it goes back in the other direction. So this can continue until all of these options expire and come off. So in other words, all of that gamma is released because the options reach expiration. So this now takes place not only in the underlying stocks, but then what added to that today is what I felt was now taking place. If we looked at the VIX, even with the Dow down, even with the Russell down on the day, the VIX was sold, and it's now back below 14. So with volatility below 14, are we witnessing a reinstitution of the dispersion trade, which I think rolls and is constantly in motion, but in its current form, when we're seeing that they're selling the volatility in the index, right, via the VIX, and they're buying the volatility in the underlying. So we see these big moves in a lot of these stocks because they're buying that volatility. So when that reverses, then of course we're going to see the component stocks go down and the indexes and the volatility in the VIX to go up. So is that in play again? Again, not gathering all that information on a daily or even an hourly basis. I can only go by what I see in terms of where the VIX is trading, in terms of where I see a lot of these underlying being pick up and really take off and go. So I say this because it is really just presenting a quagmire, so to speak, of what are we really paying attention to? Is the market really paying attention to the fact that the CPI and now the PPI should both go? Now the CPI we know is going to come out showing an increase in inflation. Is the PPI going to do the same thing? And then should the reaction, or what will the reaction be? Initially this morning, we saw that the reaction was commensurate with really what was happening with inflation. What happened next was, I think, more of which was already in line to be done today, and that is maybe the dispersion trade or just working the different underlying the companies and what maybe positions were already in existence and what was going to be done. Because prior to the number, you started to see Apple uptick. You started to see NVIDIA uptick. You started to see a lot of members of the NASDAQ uptick. So they were reinstating positions, whatever they may have been doing. And then once that opening happened, yeah, they did sell off Apple, but then they pushed it up, got it to a strike price, which is 177.5, 177.50. That's the strike price. They got it up there, maybe monetized, and boom, the thing went from there, came all the way back down and traded just below 174, and then spent the balance of the day trading between that low and back up above 175, and then back down, and then back up, and then back down. So it was just a natural ebb and flow. But then we saw it pick up in other components, such as NVIDIA, as in Tesla, which initially caught the downdraft, but then boom, turned it around and had a fairly strong up day. So again, I think now what we're working towards is, again, Friday's expiration. So there's going to be a lot of adjustments being made. So tomorrow we do get the PPI. So again, I'm thinking maybe that initial reaction, because the same thing, it should show an increase of 0.1% in the inflation rate. Well, so we're going to get the same thing, or are they just going to start by buying it immediately? So again, unknown. Now, if I look at the Elliott wave, you're going to see that how I'm labeling this here in the NASDAQ, is that it is a nesting. So we have initially the first 1 and 2 on a minor degree, then we have 1, 2 on a minute degree, and now we have 1, 2 on a minuet degree. And again, it's subdividing one more time, possibly 1, 2. We're going to wait and see. Again, outside of this, still alive is that alternate count, and that alternate count suggests that the wave 2, the minor wave 2, is still in progress. And that would suggest we have a double ABC. Now, this would be the X wave, A, B, we get a C wave. So we go up, we go above 15,696. We go up above 15,850. Our first level, of course, is equality, and that's 15,755. Now, if we get a 5 waves up and it's all done there, which I doubt, because you can see the strength of this would be wave 1 of C. And this is wave 2 of C. And then we're going to get the 3 and a 4 and a 5. So I think this is where we'd end up. And again, that's putting in a new high, and that double ABC. Still going to be below. This is the high that is covering us in terms of minor wave 1. So remember, wave 2 cannot exceed the starting point of wave 1. And if I just take this out one level, we're going to see where all that comes in. So here we are. Here we have minor wave 1. And what's that high? That high is going to be 16,251.50. 16,251.50 right here. So that level, no. This level, yes. And it does put in a new high above this particular one. So yeah, first ABC, X wave, second ABC comes in, we're done. So one more time, we might see a very strong update, or between Thursday and Friday, because of the expiration, we get that final push. And again, we're not at the desks. We're not inside all of these various firms and the high frequency firms and all the different trading that takes place to understand it's like what their plan of action may be, where their long positions sit, what they see coming off on Friday, and where they want everything to kind of expire. So included within all of that, folks, we have the NASDAQ, the S&P, the spiders, the Dow, the Russell, and then all the ETFs that have options. So again, there's a lot out there that is going to expire. And even within the NASDAQ, if we take a look at like Tesla, there are a lot of very large open interest levels up and down, and they rotate and they switch around. So a lot going on behind the scenes of just going like, oh, it's bullish and the Fed's not going to do this and not going to do that. That really, I don't even think is coming into the conversation on trading desks. What's coming into the conversation is the actual trading. So again, with all of that in mind, we must keep alive both the preferred, which I do think is going to remain exactly the same, that it's a bunch of nesting 1 2 1 2 1 2, as I have just described. And that would suggest, again, it suggests that we start to really drop and not stop. Now, again, I thought, okay, we had a good shot that this was starting today. And nope. So we got the 2. But it kind of made sense because it can come down in 5 and then goes up in 3. So I'm beginning to feel it's like, okay, nesting. And then finally, if enough came off today, or if positions are going to change, or just that the whole view changes and it really starts to present a strong wall of selling, then I think we just start to break down. And again, that is what I would look for. But each time it seems to start, it stops and they bring it back and they take it further than what I would think they should. Now, that part is also true. So again, as a position trader, I can see the problems. But hopefully, whatever you're doing, if you're being short a stock or short an index, you've got a hedge. So, the thing that I want to make clear again is that, people that have been following me and listening to my work for a while understand that I'm a day trader and I trade price action. So I don't take a bullish or bearish posture. What I present is a little bit larger picture. Because number one, I hate surprises. So I always have to have in my own mind, well, what if the market turns around and just keeps going up? What then? What are the limitations? Where can I look for this to go? And that, friends, is what I am trying to present. So we have our upside levels. Eventually, right? Here's the 100%. So again, if we're in this upside move and it's a C wave, C would be equal to A. This would be the A wave. C would be equal to A at 15,755. C would be 1.618 of A at 15,972, plus or minus. More important will be the structure itself. And that structure, if we start to head up and we get above here, then it's going to be the alternate. Right? Because again, wave one cannot, or wave two, in other words, wave two cannot exceed the starting point of wave one, which would be here, because here's the wave one. So it automatically, if it goes above there, this is out. We rearrange it. This is an A, this is a B, and we're on to the C wave. So I'm trying to lay this out so that when we get these breakpoints, we know what's going on, and you may have to adjust your position if you're positioning a position trader to realize, okay, what I have additional risk to the upside. So that's what I'm trying to do. All right, so let's kind of look at the moving averages. Moving averages continue to just kind of hug right around 1550, 15,550. All right, we got the 20, we got the 50, all sitting in there. We still got the 200 SMA on the hourly chart, still kind of, curving lower. We have the 200 EMA pretty much flat. Now in the daily, it's not really going to change. We still have the 50 sitting right here. And again, we didn't really even come down to it. So not much to be adding there. All right, let's go over and take a look at the NASDAQ. Excuse me, at the S&P. It is really the same story, but a little bit more difficult to count. But I'm going to say the same thing. 1, 2. So we got 1, 2, 1, 2, 1, 2. Also nesting. But here, it doesn't have as much room to the upside before it gets a little out of hand in terms of this could be 1 again. This could be maybe a 2, but it cannot exceed 45.42. Once it does, it ceases to be a 1, 2, and then we're over to the alternate, which is exactly the same, and that wave, the minor wave 2 is still in force. And that would suggest that we got 45.51, all of this, but let me put in one additional. I've got all these different ones here. These are downside, which I have to leave up because if we get that number and they decide they don't like it, this is where it's going to flip and fly. What I got up here, let me remove that one. And that's okay. And then we got this one. So what I want to bring in is taking a look at where actually wave C could come in. And so let me just go over to the NASDAQ because that's a little bit more. 1, 2. So that's ABC, X, A, B. So we're going to go here to here to here. And so what we have, similar, not even as high. So if we have this is going to, again, the alternate, which would suggest wave 2 is still in progress. What we have is 45.87. We're still going to come in under 45.98. So again, we have this, which also would fit in that scenario. So, but our levels, we have 45.40, 45.41, 45.22, 55, 75, 87, 98. So we got a ton of resistance going up just based on what the moves have been thus far. So I think that while we have to allow for the S&P to run itself up, 45.87 to 46.07 would be where we could be looking for a C wave. And then the minor 2 gets shifted over. Otherwise, if it does kind of come in tomorrow and they just start tanking it, then we're looking at, I'm going to take these off because we get too many lines on the chart. And then we are going to be checking out what this is all going to look like coming down. So we have coming down, we've got the 45.85, 44.71, 44.28, and then 43.58 on 1.618 because it would be a third wave, right? Minute 1, minute 2, we're looking for minute wave 3, come all the way down to here. This would be where 3 is equal to 1. Always going to be looking for more, so that we have anywhere in between here. And we'd be able to tighten that up should it occur. But again, what I'm continuing going to be looking for is this stuff, what we're doing, really doesn't occur very often inside of a third wave, except one that is subdividing and subdividing and subdividing. Eventually that break point comes and it just goes kaboom. If that continues to do this, then I'm going to be leaning much heavier that it is the alternate. Where wave 2 is still in progress, we're going to eventually move this over. But it would be moved high enough so it's not in play. But the ABC remains ABC, X, A, B, C. Okay. In moving averages, not a whole lot to really continue with, but here we are again. Here is that 50. That 50 got broken again today, but look what they did by the end of the day. So to think that there aren't other firms out there that understand the moving averages and how they work, that got back up there, because below it brings in round after round of selling, but it stopped. So this was the number, but it stopped and they just buy it back, because whatever the market to them or whomever is trading is going to go higher. So that's where they start to move in and they start to build themselves into that position. So, but we're now stuck. We're certainly not even getting above the 50% level, which is at 45.42. And then above that, we have at 45.55, we've got the daily 50 SMA flat. So guess where this thing has been sitting? In between the two, basically. So one way or the other, we're going to get this break. We are going to either break higher and to finish the minor wave 2, or we're going to break lower as a continuation of the minor 3. That's how I got to leave this right now. How you want to trade this intraday, that's where the difficulty may be coming. So again, 2 scenarios. The breakdown, it has to break 44.85 to give it more oomph that we're going lower and we're inside that third and now building on it, or it has to break higher to really give us that confirmation that would be above 45.18 or 45.41, excuse me, to give us that upside push that's very much needed to give us that C wave if indeed that's what is playing out. All right, that's where I'm going to end this for today. Don't forget, tomorrow morning, we actually have a couple of things besides just the PPI. We have the initial jobless claims and the PPI both coming out at 8:30 a.m. Eastern. And then at 10 a.m., we have business inventories. Not sure if or what that would have. Retail sales also come out at 8:30. So we have retail sales, PPI, and initial jobless claims. So we're going to see what happens. Retail sales looks like they're going to be down. There's a big decrease in retail sales month over month. So this could be very interesting. We get a little bit more. And retail sales minus autos, we got it all. And so maybe that'll be enough to kind of tip the scales if it shows up inflationary. All right, that's going to be it for today. Next update will be on Thursday, September the 14th.